if we look at price action, but also market pricing of recession risks outside of U.S. borders, I'm talking in particular about European and Chinese assets here. In case of such a, say, global recession scenario, is value to be found outside of the U.S. here, Bob?
Well, I think when you look across the global economy, and you look particularly about how assets are priced, like let's be frank, like, U.S. assets are priced, I don't know, 50 to 75% higher than they are in the rest of the world. Mm-hmm. You look at equity yields. What do you get? Like the MG ETF yield is something like 8%, and what's your yield on U.S. stocks? 4.5, something like that, 4.5 to 5. That means that you got to believe that U.S. equities are going to have radically better earnings growth, in the medium term, in order to make the trade-off to overweight U.S. stocks to make sense. And so, I look at how are equity markets priced in China. I mean, they're quite, real weak conditions are priced in China. Maybe things could be worse. That's certainly possible. But like, you have a situation where you have, P's that are running in 11, something like that. Mm-hmm. And you have surveys that say that everyone, every asset manager thinks that the Chinese economy is never going to open up and never going to grow again. Mm-hmm. It's possible that that's the case. But the trade-offs, the skew is certainly a bit to the upside relative to that set of expectations in asset markets and sentiment. And then Europe, I think the challenge with Europe is the momentum's not great because the European economies are slowing down more, particularly Eurozone is slowing down more rapidly than in the US, but it's also priced to be terrible. In terms, you're getting pretty good yield, or UK equities, which are really global in nature, but skewed to the commodity sector. You're getting, PEs that are in, again, the low, 11, 12, something like that. It could those UK listed companies could be a lot worse than the ones in the US, but all of those sort of speak to the fact that US exceptionalism is priced into the market. And the odds that U.S. exceptionalism persists are not nearly as high as what's priced into the market. That's all there is to it. Mm.
This has been a widowmaker view over the past 10 years, Bob, and I have traveled with such a view quite a few times as a sell-side strategist in banks, and it is a somehow easier view to take as on the sell side than on the buy side, I think. Whether you agree with that.
I like that.
But I perfectly agree with your assessment. I mean, it is evident that the European economy is priced for a much worse scenario than the U.S. It is evident that the Chinese economy is priced for a much worse scenario than the U.S. The question is just whether you want to bet against the U.S. anyway. And right now, I'm probably not willing to, even though I admit to the pricing being as you described it.